What is up YouTube, welcome back. My name is Tamas and this is the AlphaFX Academy. So global markets are in an absolute mess and at the same time central banks are trying to normalize monetary policy. But what does it mean for the gold USD spot market? If you're interested, a full analysis and forecast is about to be delivered, so stay tuned, it's coming. So last week, many important economic data have been released, such as the NFP, which was a huge miss. The data showed that only 194,000 workers have been hired as opposed to the expected 500,000. But there was another meaningful number which didn't get the attention it deserves. And that, my friends, is the average hourly earnings, which is going up much faster than Bitcoin when Elon Musk scratches his balls. So right now we have sticky inflation, which will be further smashed with global supply chain bottlenecks, a looming debt crisis in China, and now surging wages. All this calamity while central banks are trying to normalize monetary policy, which puts markets in a very vulnerable position. This translates into a very bumpy road, and not just for gold, for all markets and asset classes. But do not afraid, because despite all of these hurdles, I'm here to deliver another quality analysis and forecast for the gold USD spot market. So looking at the gold USD ticker on the 4-hour time frame, you can see that in the previous week's video I was expecting price to come back all the way from 1753 to 1770, where I had my sell limits. But you can see on the chart that price went a little bit above, well actually a lot above, and spilled over all the way to the previous lower high at 1778. And then what happened is price was pulled back immediately. So everyone who bought at this level and didn't close profit, they lost. And also the sellers who sold at 1770, as myself, hit stop loss 2 times, and then I just stopped trading. So this movement on gold was about $35 to $40 whiplash. Was unexpected, and I think it was overreaction of the market, which is usually happens during NFP day. So if you had 1 or 2 losing trades on NFP day, it's not a problem, and it should not affect your overall profitability if you have good risk management. So moving on to the forecast, guys, there's not much change since I analyzed the gold market last week, because you can see despite gold touched 1780, it returned to the original department at the Fibonacci 50% level at 1756, which is right at the middle of the flash crash high and low. So the analysis didn't change much, because I'm still expecting gold to come down to 1737 before it moves to the upside. Now there are many fundamental things pointing to the direction that gold is gonna be bullish, but we don't know where is the bottom. Is it going to bounce back from 1738 or 1708? We don't know yet, and this is why it's important you have to watch price action. So my original bias is that price to come down to 1737 and then move all the way up to clear this liquidity at 1733. But what if this scenario doesn't play out? You need to have a contingency plan, and I'm going to show you. What if the price comes down below this support level? It's not a problem, because we have another well-known entry level at 1711. So if price comes below, and if the 4-hour candle closes below at the 61.80 level at 1737, all we have to do is wait for a pullback. Now usually gold just melts, so it's important that you go down to lower time frame and monitor price action at that level. If price breaks this support level, you have to go down to the 15 and the 5-minute chart and look for a pullback to this level, because once it was a support, then it will become a resistance. And if the 4-hour candle closes below this level, we know exactly that the next destination will be 1710, 1708. So once price plays this scenario, all we have to do is again go down to lower time frame and monitor price action. I explained very well how to do lower time frame analysis and lower time frame trading compared with higher time frame analysis. Watch back the video from I think 2 or 3 weeks ago, where I explained what happens if one level fails and what you have to look out for at the next level. But if you don't know how to do this and how to trade on lower time frame, and if you want daily analysis and setups, all you have to do is go to my website at alphafx.eu, select the plan you want to purchase. I had a discount last week, which in case if you missed the discount, you still have a chance to sign up until next week Wednesday with the code YouTube50 and enjoy and take advantage of the 50% discount of all of the plans and courses, which comes with the daily gold analysis. I send out analysis daily to my team, and we also have weekly Zoom calls 2 or 3 times a week where we talk about the markets and what to expect, and we share analysis, which is a great thing. So this was my analysis, guys. My main bias is that price will bounce back from 1737, but if it doesn't, we know exactly which will be the next support level. So if you get any value out of the weekly videos, please consider subscribing to the channel. Please consider subscribing to the channel and smash the like button. This is the Alpha FX.